Dear students, welcome to Swayam Massive Open Online Course Public Financial Administration. I am Dr. Vijayakumari Joseph, Associate Professor, Department of Commerce, Madras Christian College, Chennai. By the end of this video, you will be able to understand the overview of the Indian tax administration, importance of having an efficient tax system, principles of Indian tax administration, prominent issues in Indian tax administration, and some of the notable reforms and initiatives. The Indian tax administration is responsible for the collection and management of taxes in the country. It plays a crucial role in generating revenue from the government, which is essential for funding various public services and development projects. The tax system in India is complex and includes various types of taxes levied by both the central and state government. Let's now look into an overview of the Indian tax administration. The Indian tax administration encompasses a multifaceted system overseeing direct and indirect taxes, managed by the Central Board of Direct Taxes and the Central Board of Indirect Taxes and Customs. It levies income tax, corporate tax, and goods and service tax, that is GST. GST, a major reform introduced in the year 2017, consolidated multiple indirect taxes. Leveraging technology, the administration promotes online filing, reducing procedural complexities. Challenges include tax evasion and disputes, prompting ongoing reforms like faceless assessments and the proposed direct tax code. The administration continually evolves to enhance transparency, simplicity, and taxpayer compliance in the dynamic economic landscape. It consists of Central Board of Direct Tax, that is the CBDT, which is the apex body that oversees the administration of direct taxes in India. Direct taxes include income tax, corporate tax, and wealth tax. The Income Tax Department under CBDT is responsible for implementing and enforcing direct tax laws. Central Board of Indirect Taxes and Customs CBIC is the apex body for the administration of indirect taxes in India. Indirect taxes include goods and services taxes, GST, customs duty, excise duty, and service tax. The implementation of GST, a comprehensive indirect tax reform, has subsumed several indirect taxes at the central and state levels. GST is a comprehensive indirect tax levied on the supply of goods and services across the country. It replaced multiple indirect taxes at the central and state levels, unifying the tax structure. The GST Council, consisting of representatives from the central and state governments, decides the rate and structure of GST. Income tax. Income tax is a direct tax levied on the income of individuals, businesses, and other entities. The Income Tax Act governs the provisions related to income tax, and the income tax return is filed annually to declare income and pay the tax. Corporate tax. Corporate tax is levied on the income of companies operating in India. The rates may vary for domestic and foreign companies. The Finance Act specifies the provisions related to corporate tax, and companies file their tax returns annually. Customs duty. Customs duty is a type of indirect tax which is levied on the import and export of the goods. The Central Board of Indirect Taxes and Customs is responsible for administering and collecting customs duties. Excise duty. Excise duty is an indirect tax levied on the production or manufacture of goods within the country. With the implementation of GST, many excise duties have been subsumed into the new tax regime. Wealth tax. Wealth tax was abolished in 2015. It was a direct tax levied on the net wealth of individuals, Hindu undivided families, and companies. Tax tribunals. India has various appellate tribunals such as the Income Tax Appellate Tribunal and the Customs, Excise and Service Tax Appellate Tribunal, which adjudicate disputes relate to taxes, tax compliance and enforcement. The tax administration is actively involved in ensuring tax compliance through audits, investigations and penalties of non-compliance. Efforts are made to simplify tax procedures and enhance the ease of doing business. Overall, the Indian tax administration is continually evolving to adapt to economic changes, technological advancements, and global best practices. The goal is to create a fair and efficient tax system that fosters economic growth while ensuring adequate revenue for public expenditure. Importance of having an efficient tax system. An efficient tax system is crucial for the economic well-being of a country. Here are several reasons highlighting the importance of having an efficient tax system. The first one is the revenue generation. One of the primary purposes of taxation is to generate revenue for the government. An efficient tax system ensures that the government has a sustainable source of income to fund public services, infrastructure development, social welfare programs, and other essential functions. Public expenditure. Taxes provide the necessary funds for public expenditure, including education, healthcare, defense, and infrastructure. A well-functioning tax system ensures that the government can meet its obligations and provide public goods and services to citizens. Economic stability. A stable and predictable tax system contributes to economic stability. It allows business to plan their finances with confidence, encourages investment, and reduces uncertainty in the business environment. This stability is vital for long-term economic growth. Redistribution of wealth. Taxes can be used as a tool for redistributing wealth and reducing income inequality. Progressive tax systems where higher income individuals pay a larger percentage of their income in taxes, which can help create a more equitable distribution of resources. Social justice. Taxation can be designed to promote social justice by ensuring that those with higher incomes contribute proportionally more to the government's revenue. This can help address societal imbalances and promote a sense of fairness. Resource allocation. Taxes can influence resource allocation in the economy. For example, tax incentives can encourage investment in specific sectors, research and development, or environmentally friendly practices. This can lead to more efficient resource utilization and economic growth. Fiscal policy tools. Taxation is a crucial tool in the hands of policymakers for implementing fiscal policy. By adjusting tax rates and policies, government can stimulate or cool down economic activity, control inflation, and respond to economic challenges such as recession, foreign investment, and competitiveness. An efficient tax system can enhance a country's attractiveness to foreign investors. Competitive tax rates and a transparent tax framework can encourage foreign direct investment, contributing to economic growth and job creation. Compliance and enforcement. An efficient tax system is one that is easy to understand, administer, and comply with. Simplicity in tax laws and procedures reduces the likelihood of tax evasion and improves overall compliance. Effective enforcement mechanisms are also essential to deter tax evasion. Global integration. In an increasingly interconnected world, having a tax system that aligns with international best practices and standards is important. It facilitates global trade and economic cooperation while preventing tax evasion and avoidance through international cooperation. In summary, an efficient tax system is a cornerstone of economic development and stability. It is not only provides the necessary funds for the government activities but also influences economic behavior, encourages investment and promotes social and economic equality. A well-designed and effectively implemented tax system contributes to the overall health and prosperity of a nation. Let's look into the principles of Indian tax administration. The principles of Indian tax administrations are guided by a set of fundamental concepts and values that underpin the collection and management of taxes in the country. These principles help ensure fairness, transparency, and efficiency in the tax system. While there may be variation in emphasis and interpretation, some key principles of Indian tax administration include equality and fairness. The principle of equity and fairness underscores the idea that the tax burden should be distributed prominently based on the taxpayer's ability to pay. Progressive tax rates and targeted exemptions may be used to achieve a more equitable distribution of the tax burden. Certainty and predictability. Tax laws and policies should be clear, stable, and predictable. Taxpayers should be able to understand their tax obligations easily, and changes to the tax system should be communicated in advance to avoid surprises. Efficiency and economic neutrality. The tax system should be designed to minimize economic distortions and avoid unnecessary interference in market activities. Tax policies should not unduly influence economic decision making and should strive to be neutral across different sectors. Simplicity and clarity. Simplicity in tax laws and procedure is crucial for easy compliance. A straightforward and transparent tax system reduces the compliance burden on taxpayers and enhances voluntary compliance. Consistency and uniformity. Tax laws should be applied consistently and uniformly to all taxpayers. This principle ensures that similar situations are treated alike, promoting a sense of fairness and reducing opportunities for discrimination. Administrative efficiency. The tax administration should be efficient in its operation. This includes timely processing of tax returns, prompt issuance of refunds, and effective enforcement to deter tax evasion. The use of technology can significantly contribute to administrative efficiency. Flexibility and responsiveness. The tax system should have the flexibility to adapt to changing economic circumstances and emerging challenges. Policymakers should be responsive to economic trends and be able to adjust tax policies accordingly. Revenue adequacy. The tax system should be designed to generate sufficient revenue to meet the government's expenditure requirements. This principle is essential for maintaining fiscal discipline and ensuring the sustainability of public finances. Participating and consultation. Tax policies and changes should be made with consideration of the views of stakeholders. Consultation with businesses, tax professionals, and the public can provide valuable insights and contribute to the development of effective and well-accepted tax policies. International compatibility. Given the global nature of trade and finance, the tax system should be compatible with international standards and best practices. This includes cooperation and other countries to prevent tax evasion and avoidance. Ethical conduct and integrity. The tax administration should uphold the highest standards of ethical conduct and integrity. This involves maintaining transparency, avoiding corruption, and ensuring that tax officials act impartially and professionally. These principles collectively guide the formulation, implementation, and evaluation of tax policies and practices in India. Adhering to these principles helps build trust in the tax system, encourages voluntary compliance, and contribute to the overall economic and social development of the country. While the Indian tax administration has made significant strides in recent years, there are still several issues and challenges that need attention and resolution. Some of the prominent issues in Indian tax administration include complex tax structure. The tax structure in India is complex, with multiple taxes levied by the central and state government. The goods and service tax was introduced to simplify this structure, but changes remain, especially with different GST rates for different goods and services. Tax evasion and non-compliance. Tax evasion remains a significant issue in India. Some taxpayers engage in activities to underreport income or avoid taxes, leading to revenue losses for the government. Strengthening enforcement and increasing compliance are ongoing challenges. Tax litigation. The Indian tax system is known for a high level of tax litigation. Disputes between taxpayers and the tax authorities, both at the central and state levels, often lead to long legal battles, reducing the backlog of tax cases and improving dispute resolution mechanisms, which are critical. Ambiguities in tax laws. Ambiguities and interpretational challenges in tax laws can lead to confusion and disputes. Clarity and consistency, a predictable and stable environment for business and taxpayers. Tax administration technology. While there have been efforts to modernize tax administration through the use of technology, there is still room for improvement. Integration of various tax systems, digitalization of processes, and the adoption of advanced data analytics can enhance efficiency and reduce compliance burden. GST implementation challenges. The implementation of GST was a significant tax reforms aimed at simplifying the indirect tax structure. However, business faced challenges during the transition, such as compliance complexities, frequent changes in rules, and technical glitches in the GST network system. Transfer pricing issues. Transfer pricing regulation aimed to prevent multinational companies from manipulating prices in transactions with their subsidiaries. However, complexities in transfer pricing rules and the need for robust documentation can lead to disputes between taxpayers and tax authorities. Taxation of digital economy. Taxation of the digital economy, including e-commerce transactions and digital services, poses challenges. Determining the appropriate tax treatment for these activities and ensuring that they are taxed fairly remaining an evolving area of concern. Taxation of cryptocurrencies. With the rise of cryptocurrencies, there is uncertainty around their tax treatment. Developing clear guidelines for the taxation of transactions involving cryptocurrencies is a challenge for the tax administration. Administrative bottlenecks. Administrative bottlenecks such as delays in processing tax refunds and difficulties in obtaining clarification from tax authorities can create challenges for businesses and taxpayers. Taxpayer education and awareness. Taxpayers' education and awareness. Lack of awareness and understanding among taxpayers about their rights and responsibilities can contribute to non-compliance. Improving taxpayer education and communication is crucial for fostering voluntary compliance. Addressing these issues requires a comprehensive approach involving legislative reforms, administrative efficiency, and the use of technology. Ongoing efforts to simplify tax laws, enhance transparency, and reduce the compliance burden, which can contribute to a more effective and taxpayer-friendly tax administration in India. The Indian government has been actively pursuing reforms in the tax administration to address various challenges and enhance the efficiency, transparency and simplicity of the tax system. Some notable reforms and initiatives include goods and service tax implementation. The introduction of GST in July 2017 was a landmark reform aimed at simplifying the indirect tax structure in India. It replaced a complex web of central and state taxes with a single unified tax, streamlining compliance for businesses and reducing tax cascading effects. Faceless assessment and appeals. The faceless assessment and appeal scheme was introduced to bring transparency and reduce subjectivity in tax assessment. Under this scheme, tax assessment and appeals are conducted electronically without any direct interaction between taxpayers and tax officials. Direct Tax Code. The government has proposed the introduction of the Direct Tax Code to simplify and consolidate direct tax laws. The DTC aims to rationalize tax rates, eliminate ambiguities, and align the tax system with contemporary economic realities. Digitalization and use of technology. The tax administration has been actively investing in technology to streamline processes and improve efficiency. Initiatives like the use of artificial intelligence, data analytics, and online platform for filing returns contribute to a more driven tax administration. Pre-filled income tax returns. The introduction of pre-filled income tax return is aimed at simplifying the filing process for taxpayers. Key financial information is pre-populated in the tax return forms based on data available with the tax department, reducing the manual effort required by taxpayers. Taxpayers Charter. The Taxpayers Charter was introduced to build trust and confidence between taxpayers and tax authorities. It outlines the rights and responsibilities of taxpayers and emphasizes principles such as fairness, transparency, and accountability in tax administration. Faceless penalty scheme. Similar to faceless assessment, the faceless penalty scheme aims to eliminate the personal interface between taxpayers and tax officials during penalty proceedings. This reduces the scope for discretion and bias in penalty imposition. Transparent advance ruling mechanism. The advance ruling mechanism has been made more transparent to provide clarity to taxpayers and the tax treatment of specific transactions before they are undertaken. Devolvement of powers to lower authorities. The devolvement of powers to lower authorities combined with a system of checks and balances is aimed at empowering tax officials at lower levels to take decisions while ensuring accountability and oversight. Rationalization of corporate tax rates. The government announces a significant reduction in corporate tax rates to boost economic growth and attract investment. The move aimed to make Indian businesses more competitive globally. Simplified annual information return. The government has taken steps to simplify the annual information return filing processes, making it easier for taxpayers to comply with reporting requirements. Taxation and dividends. The tax treatment of dividends has been restructured to align with the principle of taxing dividend in the hands of the recipient rather than the distributing company, providing clarity and simplifying the taxation of dividends. These reforms signify the government's commitment to creating a taxpayer-friendly environment, reducing compliance burdens and fostering economic growth. Continuous efforts are being made to address challenges, promote ease of doing businesses, and ensure that the tax administration aligns with global practices. It's worth noting that the landscape of tax reforms is dynamic and further changes may occur based on evolving economic conditions and feedback from stakeholders. I hope you all would have got a clear understanding on Indian tax administration. Thank you, dear students.